Hi, I'm Michelle Chidwick.
And I'm Jesse Chidwick.
And we're with Team Apex Real Estate, and today we're going to answer your burning real estate questions.
So, the real estate market in Ontario since 2017 has been on steroids, upward trajectory, and it really didn't show any signs of slowing down until February of 2022, where we started to see interest rates climb, which has now pulled the market down. So, my question to you is, who should be taking advantage of this market today?
If you are a first-time homebuyer, you should be getting in the market right now. Over the past several years, we have seen double-digit increases month over month. Now, we are seeing a pullback in the market. Just over the last couple of months, we have seen month-over-month increases, but they're not as substantial as in 2020 and 2021. So now is a great opportunity to hop on the real estate train while things are a little bit slower, because next year or the end of 2024, when interest rates start to come back down, we likely will see another big jump in prices. So you want to jump on this train now while it's going a little bit slower, then try to catch up when it's going super fast and the prices have jumped once again.
Now, and just even on that particular note specifically is yes, there's going to be a lot of conversation about interest rates, but what you're buying, the fixed element of the transaction, is going to be your purchase price.
Yeah.
Right? Your mortgage rate, unless you're choosing a fixed product, if it's a variable and it's open, yes, your rate, let's say, might be a little bit higher, 4.5%, 5%, let's say, but in a year from now, if rates do start to come down, you could jump into a cheaper mortgage rate. However, your purchase price, that's the constant in this conversation, where that is not going to change.
Yeah.
So you could see some payments decreasing as we see some relief in interest rates. But like Michelle has been saying here, what a great time to finally get into the market where, a year or two from now, you can start riding the wave of appreciation, which we have historically seen in real estate.
And I think it's important to note, a lot of people are scared to get into the market right now because prices are a little bit unpredictable. There's a lot of competition in some areas, and there's a lot unknown with interest rates. But I think it's important to remember that the real estate market is like a yo-yo on an escalator. There is going to be ups and downs, but overall it's always going up. So as a first-time home buyer, if you can get in now, you will likely see a better return on your equity. And although you may be paying in mortgage payments a little bit more than you'd like right now, it'll likely be beneficial in the long run.
Now, also on that particular note, first-time home buyers, great time to take advantage of this particular market. But also, if you have the desire to become a real estate investor, again, this is also a great opportunity for you. The market, like we've been saying here, it's slowed down. Your price points are going to be a little bit different. Your negotiations, you have the ability to work your magic, if you will. You could take some properties that need a little bit of love. Maybe there's a side entrance and you can add another in-law suite. So there's a lot of opportunity for people that are looking to get into the investor space. It's a great time to do it because, like we've been talking about here, the market, it's starting to show signs of bottoming out. So get in now while you can, because once this thing gets going, it's going pretty quick.
So from an investor standpoint, I know a lot of people are a little bit turned off by prices, interest rates, and they're basically saying, like, why would I buy an investment property right now when I'm going to be negative $200 every single month? But do you want to touch on why being a little bit in the red right now for maybe a year and a half is going to pay off in, say, 3-4 years?
Well, that's a very good point, because again, let's say, for example, it's costing you $200 in your example. Well, it's $50 a week. Now, what does an additional, let's say, $50, like let's say if even going to McDonald's nowadays, 10-pack of nuggets is going to cost you $12.50. Right?
So
we'll start cutting some things out of our budget. Now, would you rather own a piece of real estate which you're topping up for $50 a month, or sorry, $50 a week,
Yeah.
okay, or eat less McDonald's. Right?
Yeah.
Like, let's start to make some decisions that are going to pay in the long run. And much like we talked about for those first-time home buyers, this temporary pain is going to be a long-term gain because, again, you don't have to lock in your rate. Once we start to see a little bit of relief in mortgage rates, you can always refinance. And you're buying, let's say, for example, $750, you paid $750. And once the rates start coming down, we have an inventory issue here in Ontario and in Canada. So once we start to see some changes from a lending standpoint, you know, it would be fair to say that we're going to start to see a significant amount of appreciation.
Yeah.
And I will leave everybody with this with respects to investing in real estate. If I buy today for $750,000, the only time that I lose in real estate is if I sell my asset for less than $750,000. Because let's walk through this. $750,000. If I'm putting $150K down, 20%, and I'm renting out the property, it's not my debt.
Right.
Like, yes, maybe I'm paying, in your case, you know, $200 a month, but the bulk of the payments are by the tenant. This is why it's an investment.
Yeah. And I think just thinking big picture, long term, think about your equity growth. Think about 3-4 years down the line. Don't think about right now.
Well, and again, there's a lot of people that do not like to speculate, take appreciation out of the equation. Buy today $750. 30 years from now, when the mortgage is paid, you sell for $750. All you will put down on that property was $150, and the rest, when you dispose of the asset, is all net profit.
So if you are looking to get into the investing space, make sure you tune into our next video. We are going to be sitting down with Mike Rockel, who is highly educated in investing in real estate. He's going to talk to us about how to buy your first investment property, the do's, the don'ts, joint ventures, and everything under the whole investment umbrella. So make sure you tune in to the next video.